Hello traders, the title of the video is how to use the first Elliott wave range to set a price action targets during motive Elliott wave. Okay, are you an Elliott wave trader? Are you an Elliott wave practitioner? Are you an Elliott wave technician? Are you an Elliott wave expert? Do you know how to use the first Elliott wave range to set price target during a motive Elliott wave? Some traders that have been following us some time, they say, George, well, you mentioned it a bit last time. Here we have another scenario that is very interesting that I want to share with you. What I'm going to start doing first, which I say to traders, a day pro traders, is that anytime we see two channel, we want to know where is the media line. It's just something we automatic. If we don't want to draw it, we want to know where it is. Why? Because very often, all right, there will be a trading setup usually at the media line of a channel. It's just the mindset of the financial market. People like to buy at a media line. So you are likely to see high probability trading setup, especially if you are a swing trader. You can use that. It's a draw channel, horizontal channel, declining channel, rising channel, triangle, and find where is the media line and look for trading setup around the media line. Is happening, whether it's a Fibonacci key level, draw the media line between two Fibonacci key level, and you'll be amazed how other traders are looking for a retest of a media line, whether it's a pitchfork tool, the media line, Bollinger Band, the media line. Very often you can see excellent trading opportunity. So as you can see here, I have all those channels. All I'm doing, you can see here, there was this double bottom here. This is, as I said to you, it's a very interesting double bottom again. 1, 2, 3. There was one yesterday I showed traders. Again, the same thing is happening here. Double bottom with the second part, first leg up. 1, 2, 3. Okay. So here we are. I'm just drawing. Okay. So you may say, John, what that got to do with the range of the first Elliott wave? And I'll say to you, haven't finished yet. Hold on, please. Now this is to make you smile a bit. All right. So we'll come back to that in a minute. Okay. That's the media line between these channels somewhere there. Again, look, make a bow retest. Do you agree that usually trading setup are occurring? This, look at that. Look at that. It's all over the place. Media line, trading setup, boom, breakable retest, media line, powerful, all right? If you don't use a pivot level, you can use those channels, media line, look for trading setup. Again here, the last channel, we draw another line there. Is it correct? Somewhere there. This is the media line, okay? Then we're going to examine that and then discuss how one can use the media line of the first wave. So, talking about practical Elliott wave trading or Elliott wave genius, we do that. So after the first wave, one can draw a line at the low. You may say, Joe, you didn't put it at the low. And I'll say to you, I will explain to you why I did not put it at the low or the first wave. Usually today we place a line at the low of the first wave and also at the high of the first wave to highlight the range of the first wave. Because that's the measuring stick that the professional hedge fund traders, even trading algorithms are using that. They will measure this range of the first wave, talking about from the low to the high, the height, and then we start projecting it up to set a target here, there. You see, they project it above. If it's downtown, we project it down. So then we keep doing that. Again, we project it one more time. It gives us this line. Then we project it up again one more time. That's exactly where the price is stopping there. And some people who did that, even some software that are using that, didn't recognize that there is a resistance at 27251, and they know that there is a target level because the price does not go up or down for no reason, and they did take a bit of profit. The price come down here. Look at that shadow piercing to that key level. People showed it down because of the range of the first wave. So sometimes, right, what am I recording this video? Sometimes traders may know something, or they learn something, or they understand something, but they never use it. It's like me when I was trading first. I say this story all the time. I know about drawing trend line. I know about drawing channel. I know how to do them, but I just don't do them. You ask me why? I don't know why. Do you say I'm lazy? It's not lazy. The lazy will be or knowing that I have to do it or remembering that I should do it but refusing to do it. That would be lazy. No, I know about it, but I don't remember to do it. That's it. Or I didn't bother to do it. So like what I'm discussing with you, some traders already know it, but they don't do it. Why? I'm asking you a question, why? So you say to me, Joe, you say, I don't know why. I'm saying to you also, I don't know why. I say, all right. Okay? So this is it. Okay, the range. But you may say, Joe, why don't you put it at the beginning? That's a very good question. So sometimes I choose to put it at the top. You see, because this move down was quite deep. All right, second wave. If the second wave is quite deep like this, I prefer to put it here. But nothing, if you put it even here, you won't see a big difference as such. It will be like in a zone. But because the second wave was so deep, almost cancel the first wave, that's why I've used the high of the first wave and the low of the second wave. You can do that also. All right? Some trader will do that, okay? Now, some traders, what they are doing, they will use the range of the first wave projected first time like this. Okay? And when the price completed the third wave, they will use the range. So they're going one step at a time. So they use the range of the first wave to set the target there. And then when the price form the third wave, they will use the range of the third wave, all right, and project it above the third wave to set the target up here. All right, but the reason why, all right, I use the first wave is because we can use the structure, the internal wave of the first wave to focus the whole multi-wave. So the pudding is in the first wave. All right, it's there in the seed. Okay? The origin of the plant is what? The seeds on the ground. So the seed of the whole trend is the first way. That's why when we understand the psychology of those who have created the first buyers in an uptrend, the first sellers in a downtrend, if we understand the psychology of those first buyers, we can have a bit of idea how, okay, the trend will continue. You see here, what I'm going to do now very fast, as we are discussing as a friend, talking about Elliott wave. This is a special club for Elliott wave traders. So if you are not, okay, passionate about Elliott wave, please leave the room. Now, this to make you laugh a bit, all right? So, now, I'm applying the Fibonacci extension to that first wave, which I have not yet labeled. Oops. And then we're going to go one step at a time. So, now, this is the first way I apply Fibonacci extension to it. You can see that the third wave, surprisingly, was extended. You see here, it was surprisingly, it was extended. But in fact, our second wave is not here. It's here. All this move, blah, 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 it's a correction. All this move here. So went down, you see here, went down 1, 2, 3. Okay, you may say 1, 2, 3. And then he's trying to come down 1, 2, 3, 4, 5 and stop here. Personally, I think the second wave has ended here. And the third wave is here. All right? So, but if you, where are we? All right? So, if you measure, for instance, this is what I'm saying. If you measure, for instance, the height of the third wave, you see that? From here to here. And you put it instead here. All right? You see what's happening here? Or somewhere there. Okay, put it all the way to the tail here. You can see that if you put it like this, you will see that it's at a 161.8% Fibonacci extension level, all right, of the first wave, which will be a normal third wave. This is correct. Now, it's now in the zone of 200% because the second wave is prolonged like this all the way here, giving us a higher low. But in fact, this is a normal third wave because it's just this move here. Some of them will say, yeah, all right. Or they will say from here, blah, blah, blah. Okay? But I will argue that this is a third Elliott wave that is a little bit disguised, because if we have a deep second wave, we are likely to see a normal third wave. It's not always the case, but normally when the second wave is quite deep, we are likely to see a normal third wave ending in a zone of 161.8% Fibonacci extension level of the first wave. Again, we are using the first wave extension to determine the target of a normal third wave after, okay, a deeper, okay, a second wave. All right? So look at this. So we use the range of that first wave, we project it first time, so as the price breaks above, you see here, he acknowledged our resistance of the high of the first wave. Some people try to sell here, okay, but he managed to go above it. Look at that candlestick, look at this tail here. That's where people bought it. After this one stand, that monthly candle is closed. The following month, people want a bit of pullback on the daily chart, and then they take it up from there. Now, look carefully. Now you project it. So you were here, all right, you say, okay, this is exactly what you're saying. So you set your ultimate target there using the height of the first wave. You set your midpoint target here. Look, do you see the tail? People took some profit here, and it breaks above and retests. So you can use that to participate in the trend. How? Okay, just draw the trend line. Okay, so there's one trend line we can draw like this when we are there. And we can draw, you see the tail, all those tail. There's another trend I'm drawing now, connecting the tail of this candlestick bar and this one here. And now you can see here, the tail, you see how this tail try to come, this one, that's what we use first. So here, it breaks above that median line. If you didn't use that range, you will know that there is a key level here. People are watching, and you understand also why the price was slowed at this point in time. And here again, you will also understand why some people were trying to sell here, because there is a target there. You see now? You understand why the price did change direction in this zone. So it went above the target only to close back below it. Now look how it's retesting that level. See, I'm going down, retesting, converting right below, retest, turn around. This was happening here. And you will also understand why the price came down, one move down, why he was so desperate to retest this level. Bearish candlestick bar. Inverted hammer, bearish candlestick bar. You see? Invitation to sell using a top-down trade. It was volatile. They stick the finger for you. Probably they take you out before they go down. All right? Okay, you see now? Yes, look at that. So we will say, look at how where the third wave did end using the projection of the first wave. So after that, it goes above it. We did that this. Now we highlight the median line of that channel. Look where the third wave. So was it useful drawing all those lines on the chart? Yes, it was. So you after the first wave, you can do that. You can use the range of the first wave. I did mention this before, but this is one typical example that I want to share with you. So the third wave end at the median line of that channel. Look where the fourth wave did end. Again, at the median line of that channel. Look where the second wave did end. At the median line of that first wave. Can we use that? I think everybody will say yes. If you say no, please let us know in the comment section so we can ban you from this channel forever. That is to make you laugh. I'm kidding. We will not ban you for that. Alright? So see how? Pink one, median line. Median line, median line. Look at that. Isn't it beautiful? And look, now that we are now in the fifth wave, look, breaks above a pink line, retests, break above, all right? Now, if I resistor here, didn't break. Now, it breaks above it now, you see, it went above, people sold it. So, this is what's happened. The last lap, do you know the psychology of the fifth wave? During the fifth wave, it's the last lap. So, when you play computer game, the last lap, you want to speed up and catch up, all right? So, when the trend is now in the fifth wave, some late comments say, all right, So they were selling because the stochastic was overbought on the yearly chart. And now finally they realized that what George was saying for a year, and when the stochastic is overbought, one should in fact look for an opportunity to buy when the price break a resistance. So now they realize that, all right, that stupid George is in fact for the first time right in his life, and they come to join the trend. Okay, so it's easy for people to spot the last lap or the fifth wave. That's why sometimes you see the fifth wave extension because of the late coming. They say we need to join them now. It's too late now. Don't sell it anymore. Buy and hold. All right. So those people coming in late, everybody joining it because now they see clearly. First wave, second wave, third wave, fourth wave. Everybody else they see now. Okay. Now they're joining the fifth wave now. All right. All right. So not only that. The fifth minor wave or the fifth wave can also be extended because of the same reasons. So that's why sometimes when you see the fifth wave is extended, you see 1, 2, 3, 4. The last move will be fast. You see, even now you see here 1, 2, 3. They push it straight away to the target. You see here, these are the phenomenon of the fifth wave or the fifth minor wave of a fifth wave. As they know where is the target, as everybody realize where the target should be, in fact, what's happening, people will already place order here to sell. Now, forcing the price to come and fill those orders. This is not market manipulation as long as they do not cancel those orders. If you place orders only to push the price to X and cancel it and do something else, all right, you are manipulating the market. And the SEC may chase you. You don't want to do that. So those traders that are placing order here to sell, they are genuine sellers. They're not going to cancel those trades because they know the target now. Everything becomes clear in the fifth wave. Can you see that? Everything becomes very, very clear in the last lap. So that's it. This is it. So this is an extension. First minor wave, second minor wave, third minor wave. Almost they push it straight away. They say, why should we wait for the fall before they just push it? Pew! Orders fill, they sold it there, come down, now they are pushing back there. All right, you see now? So just, you see, how the price did acknowledge that median line again, how the price did acknowledge, all right, the projection of the range of the first wave. See how this worked beautifully. See how this did help our trading setup. All right? Even if you put the pitchfork tool on this chart, you will see a lot of hot spot trading zone. The intersection between the pitchfork tool and those key levels. Look at that. Look, this is what we are talking about. You see the intersection between the pitchfork tool. This is a hot spot trading zone. If you are not subscriber to Day Pro Trader, you know this is what? This is here what? A hot spot trading zone. Because of what? The intersection between the pitchfork tool and another key level. This was one, almost there, couldn't reach it. All right, you see now? This is what we are talking about all the time. The intersection between pitchfork tool and key level. Those are hot spot trading zone. Handle it with care, my friend. All right. So now, as I'm counting like this, now I'm saying to you, so this is what I'm saying. So we're going to wrap it up now. So now you know how to use the first Elliott wave range to set price target during a multi-wave. So now we don't want to get carried away. So we say, all right, we are happy with our wave count. So we leave a line there for now, okay? So what we can do also, anytime we call anything 5, we also put there 1, okay? All right, that's what I'm going to do. So I'm just showing you the thing that you have to get into habit of doing every day. So you may say, all right, I'm now getting a message, all right, that stupid George in London is talking about every time, all right? So we call it 1, okay? Another thing that we can do, that is just, anytime you see 5, that's what I say to you, to avoid the Elliott wave count analysis shockwave. Have you watched that video already? Check it out. So we put a question mark. That will be something that I will recommend to traders to do now. So anytime you see 5 and you call it 1, or anytime you can't find, and you call it an impulse wave, with that first, third, or fifth, you call it an impulse wave, or one, all right, you want to put a question mark on every 5 because the price can continue to go up after you have labeled anything 5. So that will be something that we want to do now. I'll add that to it as a practical Elliott wave trading tips that we can adopt, meaning that anytime we see 5, we call it 1, but we also put a question mark on it, and we say priority to bullish signal above, a priority to bearish signal below, knowing that because I'm on a monthly chart, that last candlestick bar is not yet closed. And if we drop down to the yearly chart, that yearly candlestick bar on the yearly chart is not yet closed. We will put our wave count aside and flow with the price, drawing channel, drawing trend line, using market geometry without going ahead of the price. We will not impose our wave count to the price. As you can see, okay, the range of the first wave has been very, very useful to us. Now we are combining that with a pitchfork tool to highlight the hot spot trading zone. And all we do, we just flow with the price, okay. Yeah, now we have a pitchfork tool. We can draw again a trend line, a very nice trend line like this. Very simple. In fact, I will use those two low, this low and this one here, to make it quite close to the price like this, and just leave it on the chart. All right. Okay. Nothing should stop you also, in order to determine where, okay, the corrective, if this is truly the end of the fifth wave, if a correction has begun here, where is the corrective phase likely to end? So I'm connecting the high of the first wave and the high of the third wave. That's a very, very important thing, a practical tips, okay, for somebody who is counting Elliott wave. After the wave count, one must do those kind of things, okay, to help, okay, one's chart analysis. All right. So let's color that in black. That will be beautiful color. The black belt. Here it is. See, connecting the high of the first and the high of the third. Will it come to retest this first or the median line? We leave that line there. You see now? Okay. And when we recognize a trading setup, break above retest, break below retest, all right, or 1, 2, 3 minimum price move, retest the key level, all right, or and so on, all right. We just implement a different time frame, okay, trading method. If the signal fell, well, we just laugh, all right, and come out of the trade before it is too late. And again, as we finish to count our wave like this, we try to go into the mind of other traders and see whether they will see something different than us. So even some trader may say the second wave has ended here, no big difference. So his third wave will say start here all the way up here, no big difference. He will say fourth wave definitely here. He will say fifth wave definitely here. Somebody going to the yearly chart, will there be any difference? So on the yearly chart, one must always say first wave definitely here, second wave, and they will say all this, George, all this is the third wave of a higher degree, George. This is the first wave of a higher degree. So this is, again, okay, a person may say that this is the first wave of a higher degree. This is the second wave of a higher degree, George, or all you are calling now, okay, 1, 2, 3, 4, 5, is not. So the move from here, George, is just, okay, let me show you. It's just a second wave. I don't know where you link your Elliott wave from. From 2000 now, we have a new trending pattern. All this is, okay, just the third wave. And then we will have the fourth wave and the fifth wave. And I will say to that trader, so you will be expecting the fourth wave and the fifth wave. And I will be expecting a correction that is likely to be deep. And if that is not deep, I will understand that, okay, your wave count is correct, that yours is, okay, fourth wave, and I will also be selling from here down, but I will be expecting deeper correction, you'll be expecting a shallow correction. And if the price start going up, I'll just flow with it and to form, okay, the fifth wave, and then all the disagreements, okay, will evaporate. So I'll go back before I wrap it out, put it again here, a question mark. So put mine here, and then I'll put another, okay, 2 there. All right. I will color that into pink, but I will also put a question mark next to it. All right. Put a question mark to that too. Put it there. All right. Happy? Everybody's happy? All right. Okay. And then I will also, so tell them, I say, George, yes. Now you are done. You've done it correctly. Before it was completely useless. Oh, George, you don't know anything. All right. All right. You won. You won. Okay. Well, okay. Again, I put there. So somebody said this is the third way. All right. So, and then I will put again a question mark. Okay. Next to that third way. Okay. Is that trader correct? A question mark. So those are the things that you can do, talking about practical in your wave trading to help your wave count. All right. So this is it. If you have any question or suggestion, please put in the comment section. And in due course, I will be recording another video to answer your specific question. If this video has been truly useful to you, please let us know by sticking your beautiful thumbs up. If you dislike it, please mark it down. Sometimes they may dislike it and say, George, I want it 10 minutes. Now you go 26 minutes, you're talking a bit too much. Some video, if you want to go deeper, especially if you want to compare different scenario of wake count, you're not going to do it in 15 minutes, all right? You're not going to do it, all right? Because I want to do it in front of you, so you may say, I may prepare everything ready, draw everything like this, and then I will just go blah, blah, blah. But I want you to see what's going to my mind, how I'm going from one way to another, and how I'm going to the mind of other traders. Otherwise, I can get everything ready and just tell you, second way, another meeting, blah, 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 and then we talk about it very fast. But I want you to understand more. That's why some video, maybe 30 minutes, all right, maximum. Some will be less, all right? This is the scenario here. When it looks like George, you were a little bit excited. You are drinking too much coffee. So this is only 2 cups of coffee I drink today. I don't drink too much coffee, all right? So this will conclude our discussion today about how to use first Elliott wave range to set a price action target during a motive Elliott wave. If you have not yet subscribed to our channel, please subscribe to our channel. It's free. Click on the notification bell, so anytime we record a new video, you will be the first person to be notified. If this video has been useful to you, please give us the thumbs up. If you dislike it, mark it down. If you think that this is an essential tutorial that can help other traders, feel free to share with your friend on Google+, on Twitter, Facebook, and Tumblr. All right? Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to use a first Elliott wave range to set a price action target during motive Elliott wave. Happy trading to you all, and I will speak to you soon. Thank you for watching.